All right, Jacob, I'm ready if you are.
Hey Amy, how are you today?
I am well. How are you?
Pretty good.
Okay. Merry Christmas, Happy New Year.
Yeah, we had a nice present over the weekend, right?
Yeah, per usual. It's either weekend, Labor Day weekend, Christmas holiday kind of thing. Want to tell everyone who is a regular for watching that Beth is not going to join us today. She is in the weeds with work, so we're going to tackle this high level review of the recent stimulus package that was passed.
Yeah, so it was passed last week, right? So you may have seen a lot of articles coming out on this. Then Trump finally signed it on Sunday night. The good news is there really isn't any changes because the way legislation works, they couldn't make any true changes to the legislation once Congress and the Senate passed, unless they'd done an amendment by unanimous consent, which did not happen. So, what Trump signed on Sunday night is the same bill that passed last week. So as you see the different news articles come out or the in-depth reviews of them, the details of that bill stayed the same from when it passed last, Monday night? Yeah, so last Monday night to being signed Sunday, it stayed the exact same. I think it's an important caveat there is, I've seen a lot of questions like, well, what's the current text of the bill? It didn't change from what was passed there. So wanted to start out with that from a high level perspective, but.
Yeah, that's good. And this document, I mean, as you've seen so many people post, I mean, it was over 5,500 pages. It had so much more in it because what I have understood just from reading different things over the weekend, and I will admit up front, I've flown at about 10,000 feet because I want to see what's final before I start digging into the details. It not only deals with the COVID-19 stimulus for small businesses, but it also deals with a lot of other things that Congress had pushed to the end of the year. So it's not 5,000 pages of what an accountant has to dig through.
I mean, this is the typical year-end bill that Congress does, their omnibus spending bill, which is truly, this bill is what funds the government for all of next year, right? So technically, the government doesn't run on a calendar year, but a lot of times they just pass continuing resolutions and kick this can till the end of the year. And before Congress leaves, they always try to shove through an omnibus spending bill. So most of the things in this bill are not stimulus related. They are general spending. So I think there has been a lot of confusion from that level of people are saying, why is that in the stimulus bill? Well, it's not in the stimulus bill. It's in the omnibus spending bill, which they decided to include stimulus on. So very different there, just perceptions. It is a combined bill there. So it changes a lot of that.
Yeah, agreed. I think that's a good point. So what we're going to focus on today is of the stimulus bill. First of all, I mean, I think it's worth a minute to say high level all the different things that affect small businesses or an accountant providing service to a small business. But what we're going to focus on is PPP 2.0. But tell us, Jacob, high level, what are those things that addresses?
Yeah, and we're not going to hit on all of them because there's a lot in this bill, right? And there are pieces that are going to impact you that aren't in the stimulus section. As an accountant, there are pieces in there that definitely will come to play. Just like when Congress changes tax law at the end of every year, it impacts a lot of us. Those same things are in this bill as not part of the stimulus. So, when we say you don't have to deal with it all, there are pieces scattered throughout, and we're not going to touch on all of those today. But I think when I look at this, what are those big pieces, right? Clearly PPP round 2, which I think we're going to dive into in a lot of depth today. The employer retention tax credit, the expansions and the changes to it, which make it, you can now use that credit even though you had PPP, and those requirements are changing for 2021 versus 2020. If you have, if you're dealing with clients or if this is you personally and you've had large revenue loss, I think you should definitely look into that or talk to your advisor and make sure you understand that credit because it can be very powerful in conjunction with PPP or even if you didn't get PPP. So I think that's a really big one. We have an expansion of EIDL grants, especially for low-income communities, as well as the potential of the EIDL loan program opening back up, although we need some more details on that. Another big one that I think impacts a lot of accountants and a lot of small businesses is the Family First Coronavirus Act. That sick leave program was set to expire 12/31, which means as people go out on quarantine, that is how we are paying them and getting that money reimbursed from the government. That was set to expire. So there is an extender in here that pushes that out to March 31st. And as we see an increase in cases right now, I think that's a really big piece that a lot of businesses are going to be impacted by, just because they would have expected it to be there. So they may not feel the impact because they had thought it was going on, but there's a big impact to them that they're not realizing because that is being continued. And then I think the other piece I think you point out is their SBA 7A loans. They're going to make 3 additional payments for them. And then overall taxability of a lot of these things changed, right? So PPP expenses became deductible. The payments made on your behalf by the SBA are now no longer taxable, right? So that's tax-free income. EIDL grants are now tax-free income. So we just moved a lot of things from potentially taxable income or a tax impact to a lot of our stimulus has now become a non-taxable event or non-tax impact, which from a general book perspective, I think this is important to start thinking about that for your tax preparers. Like, where are those sitting at on your P&L? So I really encourage you to create an other income non-taxable account that you can stick those in. So when your preparer gets this and it's not been talking to you all year, suddenly it's called out for them and very visible. I think the only other thing from a high level is there's a whole lot of tax extenders in here, which are going to impact a lot of the tax preparers. A lot of tax credits got extended or expanded. So just know that those could come to play and those could be very useful for a lot of people. I think in the format of trying to keep this brief as we do, I don't think now's the time to go into it because I think you would have to spend hours on a webinar to get through all of those. I saw someone the other day joking like, when's the 80-hour CPE coming out on this bill, just so we can start to grasp it. There's a lot in here. So at a high level, just wanted to hit those points. And
yeah, for sure.
Pay attention to them.
So at the end, don't let me forget to post these. I think we've come up with 3 resources that will appeal to 3 different kinds of accounting professionals that can give you either a high level overview if you just need to be conversational. There's a great 2 great podcast episodes that Cloud Accounting put out. I listened to those and I felt a good grasp of being able just to speak about it and start asking questions. We'll post a link to those. We have a great friend, Chris Maxey, who is with Prefix Accounting. He wrote an entertaining blog. I mean, right out of the chute. I think it was on the 22nd. We'll post a link to that. If you want to get a little bit more technical into details, we're going to post a link to that one. And Chris is entertaining. He's just funny. He's great with words. And then our other buddy, Paul Lance with Launch Consulting in Austin. If you're a tax practitioner, we're going to post a link to his blog. He's as tax smart as you, Jacob, and you will. If you're a tax person, you'll nerd out on his resource. But
I'll throw
back up.
I'll throw 2 others out there real quick. Tony Nitty is a Forbes writer. He has some amazing articles on this, and he really dives into the weeds on some of the individual credits. Like if you're looking at employer retention credit, he has a 2-part series on it that are both multiple pages long because that's what it's taking to understand some of these changes and some of these credits. So people like him, Kelly Phillips Erb on Forbes as well, like they're doing
she's great.
And they're continually pushing things out and making sure as little things change that they're out there as well. So I'll just throw those resources out there too, of 2 other people that I follow a lot. I think, Chris's and Paul's blogs are amazing, but also when you look at Tony and you look at Kelly, it's clear that they write a lot, right? And they're on top of this and they can spend a lot of time on it. So where, myself, Paul, Chris, we go through and we do an initial dive because we feel like we have to own it and understand it. But sometimes then we're not continually pushing out content to dive in necessarily on all these credits for people. But if you follow those resources, they will dive deeper on some of these topics as we go.
Well, and to your credit, though, it's because after you digest it, you go out and put the pen to paper. Well, not you go and implement it. There's no pen to paper. Okay, so let's we intend to talk about PPP and 2 things. Let's talk about round 1. We have a lot of people that are starting to get their forgiveness applications approved, and they're wrapping up their books for the year, or that you are wrapping up the books for them. So let's just very basic, very clear. This is what we're doing in our firm. That initial PPP loan proceeds have been sitting over on our clients' balance sheets as a liability, as a loan. When they receive forgiveness, we are creating a brand new account, an other income account, PPP loan forgiveness, and then we're labeling it non-taxable. We did that thinking that it would be very clear to the tax preparer. As a tax preparer, is that the way you want to see it?
Yeah, definitely want it down there under other income called out. We are bouncing back and forth. Some of our clients were creating an account just for that. Others were calling it other income non-taxable, and we're lumping in there PPP forgiveness, SBA loan payments made on their behalf, the EIDL grant. We're kind of just bundling that all together.
Okay.
We're calling it other income stimulus non-taxable, right? Something to that effect.
But the key is that non-taxable, all
correct.
caps, so there's no doubt. And then if you are preparing the books, in the description,
Tell us
say what it is.
Yes.
Put an attachment on it.
There's other times, there's a lot of state grants floating around out there that may or may not be taxable. And we're going to see tax treatment different potentially at the federal level and the state levels. It's going to be different impacts. We're already seeing that on PUP expense deductibility. California just came out and said those are non-deductible for California. So, just expect in this, keep it clean and put that in the non-taxable, but also expect that tax preparers are going to have to ask for a lot more detail this year, especially depending on the state you're in.
What we are doing, because our focus is client accounting services, preparing the books, is we have great relationships with a lot of tax preparers. Many of them know we're accessible because we talk to them all year long. But for those that we only talk with at tax time, we are being proactive, sending them a message saying, this is what we've done. We are here for you. We've tried to attach everything. Here's a shared folder. We're trying to get them that information so they're not scrambling, because those of you who prepare tax returns, y'all thought last year was interesting.
Yeah, this year's going to be much worse, in my opinion, because there's so many changes. We're going to see major delays. There's a lot of states that don't conform to the federal and how they're going to treat this. I've seen projections out there like this state's probably not going to decide that until May on how they're going to handle deductibility. So when we say we had a rough tax season before, it's going to compound it, and we're going to need different things for different states, especially if you have multi-state entities. It's going to become super challenging. So just expect that request to come back. Don't get aggravated with your tax preparer when you're like, why didn't you ask for this the first time around? Frankly, they may not even have known they needed it, and they may, every state's different. And as they get into it, the rules are going to be changing during tax season. So, when the rule changes, obviously what they're going to have to request is going to change. So just be aware of that as they go into it.
Yeah. Okay. So you alluded to this, and I wanted to be very specific. There has been talk from day one of the PPP loan proceeds that for the what you use the proceeds for are those going to be deductible expenses? And this new stimulus package says yes. Essentially, we can double dip. It was a grant. It was free money. This is
typically the way a grant works: is you get money, and then what you expend it upon is non-deductible because you got free money. It washes out. But this is a little different. This is like somebody walked up and handed you $100,000. You stuck it in your business, and now you paid expenses with it, and you get that deduction for it, right? So it is not a non-taxable grant in that same way. It's a very different metric. And the only way I can come up with it is like someone handed you $100,000 personally. You stuck it in your business, and you spent money on it, and now you get a deduction.
You used it for the right things.
Yes. So
okay, so we don't have, as preparers of the books, we do not have to take the payroll that was used or the payroll that was run using PPP proceeds and put them in a different account. It all just we're status quo.
Now
that's wonderful.
The challenge in this is going to be if you're in California, you do have to reduce those expenses. The tax preparer is going to have to know what amount of that California payroll was paid with PPP dollars, because he's going to have to reduce that California payroll accordingly. So it's going to create a lot of challenges where you are correct at the top level for the federal books, but they're going to have to make a lot of adjustments for state tax returns at different times.
Okay, good point. Okay, so I'm gonna say it back. Federal level, we don't have to block out anything. It's all deductible, but it could vary on a state by state basis. Okay.
And especially for financial
Um,
purposes, then if you're on a tax basis, financials definitely don't reduce them. Gap, you wouldn't have reduced them anyways, I think, with the current rulings in the gap side. So um, keep it flat, right? Like just keep it where it normally hits, and you'll be
mhm.
much better.
Okay. Let's talk about the forgiveness applications real quick, because that, for those, we had a lot of clients that have filed and they're done. They just want to be done with it. But the stimulus package says anything $150,000 less is basically, correct me if I'm wrong, you are attesting that you used the funds for the proper reasons, and you will keep documentation of that for 6 years. But other than that, it's a rubber
Yeah, so
stamp.
it became a rubber stamp. It's an application of not more than one page, is what Congress determined. That has to be released within 24 days of signing. So that puts us somewhere 16th, something like that, right? 14th, 16th, something. I think it's the 16th, actually, from data signing, is when that application has to be out by. Now, when banks are going to open and start accepting those, unsure of, right? But essentially, you should be making sure you spend it all for the right purposes, and it's rubber stamped when you submit that application, right? Um, so really at that point, the way it looks on the surface is your FTE requirements kind of disappear under 150. All those type of things no longer really come into play. The other thing that changed in this definition when we look at forgiveness is those other expense definitions. So, for PVP, what qualified? Well, 60% of it has to be spent on payroll, and 40% of it could be spent on other qualified expenses. And they expanded that definition greatly to include most of your operating costs, some of your supplier costs. So things like your accounting fees, your legal fees, all of those things are now included in there. For
Mhm.
restaurants, perishable goods are included the whole time through. Otherwise, supplier payments are if you had a contract requiring you to do those during the time. So definitely a lot of interesting things. Software costs are going to be in there. So you should be able to expand and fill that 40% much easier, even as you're
Sure.
doing that calculation and notating it out. So I think that's the big things on forgiveness. Just know we're going to have this lull. I know several banks we work with have said we're not taking any applications right now at all until we have some
Yeah.
additional guidance on some of this stuff. So they've turned off the forgiveness fountain right
Yeah.
now. And, I kind of expect them to leave it off for a little bit because they're going to be swamped as PVP round 2 comes into play. They're going to have their heads down trying to just get through the
Figure
applications,
that out.
understand the new side. So even when this drops, I don't know if we'll see all the banks turn it right back on and let you apply for forgiveness right away.
Okay. All right. So that's a great segue into 2.0. Um, let's stay high level because we're already getting
Here,
close to end of time, and we'll
here
need
we
to
go
do,
again.
we'll need to,
I'm just going to start with
yeah,
here we go again, right? Like it's PVP
yeah.
round 2. We all thought this would be behind us, but not so.
The first thing that I have done is just high level look at what the requirements are, who will be, I can't talk today, who will even be eligible to apply.
Right.
In our client base, we have very few, just based
Yeah.
on the quarterly revenue metrics.
Right. So I think we did, I have to go look. I think we were close to 50 actually PVP loans the first time around. And I think we're down at like 8 or 10 that are going to qualify this time around.
Yeah,
So the big criteria here is you have to have a 25% reduction
quarter over
in
quarter.
revenue when you compare the 2020 quarter to the 2019 quarter. So that could be Q1 to Q1, Q2 to Q2, Q3 to Q3, or Q4 to Q4. So in any of those,
Yep.
if you're down 25%, then you now become eligible for PVP round 2. So
Yep.
that is really the only requirement in there, right? And it doesn't change by industry. It doesn't change by anything. It's just 25%. Some of the other calculations do change by industry, right? So if you qualify, most industries, it's going to be the same calculation as before, 2.5 times your average monthly payroll. If
Yep.
you are in a restaurant or hospitality, you get a bonus here. They're going to give you 3.5 times your average monthly payroll. And there is a change in here where you can use 2019 payroll still, or you can use the preceding 12 months to your date of application. So theoretically 2020, right?
Mhm, mhm.
Depending on where your payroll levels were. So there are some changes there, but that's the high level, like, what the criteria are and how they're going to calculate it. Do know that expanded other expenses do qualify for it once you start using it, but it's still majority, 60% still needs to be spent on payroll, 40% can be those other expenses. Covered periods appear to be the same. There are some interesting dates out there. If you wait too long to apply for this, so you could not get your full 8 or 24 weeks because of the end date out there.
Right.
But then date of applications are for forgiveness on PPP round 2 are still that 10 months from the end of the cover period. So, you know, we could be still dealing with forgiveness applications in 2022.
Yeah, yeah, which does take a little bit of the pressure off and rush to get it all done. But it's just, I mean, it will not be, the volume will not be there. There will not be the learning curve nearly as much as there was in round 1. But I was kind of talking to my team this morning, not about this, but just about accounting life as we start into January. It is not a sprint. It is a slow, steady run, and
it's a long.
Yeah, exactly. I think we wrap up by saying this. We're going to post those resources again in the comments when we hang up. If you just want a high level working knowledge, I would start with the Cloud Accounting podcast. If you want an entertaining, not only informational, but entertaining blog post, we're going to post Chris Maxey's. He came out with that quickly. And then we're going to get into the more technical blogs and references to people that it, like you said, that is their job to write about these issues all the time. So spend some time, dig into the level that you need to be able to do your job well. And do not hesitate to rely on those who that's what they do all day long. If you're trying to keep the books for a company, be the controller, pay all the payroll, and do all of that, set your pride aside. Ask for help where you need it, because you are asked for help in your expertise. Everybody's going to have to work together yet again to get through this season. And
even if you're an advisor, don't be afraid to reach out to other advisors and collaborate on things. You know, Chris Maxey did this blog post. We collaborated on it quite a bit. I helped him out. He's helped me a ton over this time. I've helped a lot of other CPAs that have reached out to me and said, hey, I have this situation with a client. How do I handle this? What do I do? You know, don't be afraid to reach out that hand to other people and say, I need help. And we're all in this together, and we all probably need help at different times, especially with the law changing as fast as it is. And, you know, guaranteed there's going to be a whole bunch of interim final rulings that change our perception on a lot of things as we move forward in this. So keep your mind open, and collaboration will help in reaching out to your advisors. So.
Okay, and then the last thing I want to say as a disclaimer is, if you are still using that crowd shared calculator that we created for PPP1, I think it's time to set that aside because it's gone.
Yes, very good disclaimer.
All right, Jacob, as always, I enjoy speaking with you.
Same to you.
Okay, we'll see you next week.